Welcome back to Dukascopy TV. I'm Elaine Stenson. The US saw the fastest annual house price growth in 8 years in 2013, but momentum in the country's housing market is beginning to slow down. I'm joined now by Bob Slade, Managing Director with FXDD in New York. Bob, in your opinion, what factors have led to this slowdown?
I think we're seeing a few factors that have come in. Let's first take the terrible cold weather that the Northeast in the United States has had, and then the drought over in California. So you certainly see cold weather hurting January and February numbers when it comes to housing. That didn't help at all. What also hasn't helped at all is that the price of the mortgage rates have gone up. This week, for example, we're at 4.53 versus the week before at 4.5. It wasn't long ago that we were 2.5%, 3.5%. So we're seeing the rates of 30-year mortgages going up, meaning the cost will be a little higher, i.e. people have to come up with a little bit more of outright down payments for their homes. Also, we saw almost the lowest level in 2 decades of mortgage applications this week. They were down 8.5% versus down 4.1%. Now, that's coming out of the Mortgage Banker Association numbers, which is something that they look at on a weekly basis, and they are saying that it came out this morning at the lowest in normal in over 2 decades. So it's certainly things that are not helping. Application volume falling 8.5%, and refinance index, which is people who already own homes in the United States and are looking to refinance the rates, is also down 11% because rates have moved up. So these are a few factors. I also feel that a recovery or an economic recovery without real job growth and with a weak real estate market becomes a difficult recovery to sustain.
Housing is perhaps one of the most cyclical sectors of the economy and tends to lead economic swings by months to years. As such, keeping a close eye on housing provides a valuable insight into future economic trends. Do you think that this is a sign that the US economy is slowing down?
Well, there's been a couple of different comments from different people. Robert Shiller, for example, from the Case-Shiller Index, made a comment, with home price gain expectations, they seem to be losing our sense of optimism about housing, and it's percolating throughout the nation. So you are seeing people saying things are slowing down. There seems to be less of a euphoric situation going on in the minds of most homeowners. Plus, I think we're going to see the housing sector is going to be very uneven in its growth area throughout the United States. You'll see certain regions like the South that'll probably do much better because of their lower costs and lower taxes versus the Northeast or the Western United States because, again, of their higher costs, their higher taxes, and overall higher labor and construction costs.
Okay, Bob, you've mentioned the regional areas there, but overall in the US, do you think that the housing downturn will continue?
I think we're going to see a continued somewhat downward trend until we get rates stable. With rates at 4.5 moving on up, it turns a lot of people away from outright buying and getting into new housing. And that'll be something that, in answer to your question, yes, I'm a little bit of a bear on the U.S. housing market, but overall I'm very bullish on the United States economy. But I think we'll see a little bit of a difficult year this year in housing specifically.
Okay, Bob, thank you for that as always. And that's all from me for now, but do check back for further updates and interviews from the TV team. Bye for now.